tell people you've got basically between now and the end of the decade to get your financial house in order, because those that do are the ones that are going to have the best chance to survive what happened in the 2030s. I don't say this lightly because I mean it's easy to talk about, but it's going to be really dire, I think. And I keep telling people focus on this year and between now and the end of the decade, because there will be great opportunities in commodities post bust. I'm calling for $500 oil by the end of the decade. I'm calling the reason we have 25% inflation is because that money leads to a lot of money chasing a lot fewer goods.
Sure.
And those goods, it's going to be an industrial recovery more than a consumer recovery. So those goods are, the commodities. So ag commodities, gold, copper, silver, all the, industrial metals, natural gas will go through the roof, oil go to $500. So it's, there is an opportunity on the other side of the bus. It's just not going to be in tech stocks or in growth stocks. It's going to be, or indexes. It's going to be in commodity-oriented stocks or commodities. And I tell people, you've got basically between now and the end of the decade to get your financial house in order, because those that do are the ones that are going to have the best chance to survive what happened in the 2030s. It's don't stay, as much as it sounds horrible and you want to think about it, try not to focus on the 2030s because it's so far out. Things can happen. I could be wrong. I'm painting a picture of what I see coming together, but the time to focus is this next 6 years.
I mean, I looked at the chart the other day. It's the price of a Campbell soup over the last 100 years. It's a beautiful measurement of inflation because the product is exactly the same. The size of the can is exactly the same. Maybe it's too expensive to buy machines that produce smaller cans, but the price is up like since 71 by about 12 times.
So we're going to say... I
used that chart to show that actually the price of gold, and I have to say, my largest holding of all my assets is gold. That I have to say, and I will never sell it. Because when I look at central banks, it's a horror show. I mean, as anyone who trusts these liars and misleading characters and shady characters and people who've never worked in a private job, who could trust them? So I hold gold as an insurance policy, but I don't think that the gold price is all that cheap.
But
when I compare my cost of living in 1950 and today, I have to say that the gold price is about where it should be.
Well, I'll use the U.S. again since it's the largest. The U.S. has had 3 central banks in our history. The first 2 disappeared for various and sundry reasons. We now own our third. It's going to disappear too for its own various and sundry reasons. Not this month, don't worry. The Federal Reserve is not going to disappear, probably not in 2024, but it will, because they're making many mistakes, which central banks have made before. And I mean, somebody seems to think that, or maybe many people seem to think that when you become a central banker, oh my gosh, you have all sorts of vision and intellect, and you know a whole lot. These guys are just bureaucrats and civil servants and academics. They're not any smarter than any of the rest of us. They wouldn't have a government job if they were smarter than the rest of us. No, I don't have any confidence that they're going to get it right. Of course, they'll get it right at times because they have so much power. They can print and spend and borrow staggering amounts of money. If you can do that, you can certainly have a big influence, at least for a while. So do I have any long-term confidence? No, as I said. The first two American central banks disappeared. Don't worry, the third will disappear too. I bought my first gold in 1981, was that 71. It was still illegal for Americans to own gold. I bought some in Canada and some in Switzerland. It didn't take you, I could see the change coming, I thought, and it became legal for Americans to own gold. So I own some gold, I own some silver. Dave, I'm an old peasant, and all of us old peasants know when things go wrong, you better have some gold under the bed. You better have some silver in the closet, because when things go bad, everybody will accept your gold and silver. They may not accept other things, but they will accept your gold and silver. It's always happened. I hope that if it happens again and we have a last gasp, a blow off for gold and silver, that I'm smart enough to sell if it gets that vigorous. I don't want to sell. I want to leave it to my children. But if we do have a wild blow off, you have to sell. You have to sell blow offs. So, but at the moment, I have no intention and no hope to sell my gold and silver.
I think in reality, I mean, I'm probably going to sound like a broken record. So I thought we were in the sort of having last orders at the last chance saloon back in 2008. And then we've subsequently had the most extraordinary period of market stimulus, money printing, inflationism, et cetera, et cetera, et cetera. Gold has partly reacted to that. So, I mean, I think the bad news in relation to things like gold is somewhat overstated. There are some guys you probably know, a group called Incrementum based in Liechtenstein. They do a great report called In Gold We Trust, which comes out every summer.
Indeed, yes.
And it's probably the most widely read gold research in the world, I'd suggest. Anyhow, so their stuff is very, very good. And they put out a table with that. And basically, whichever currency you price gold, because clearly as a sort of currency, you can price gold in any currency. It's just like an exchange rate. But whether you're looking at it in dollars, in sterling, in euros, in yen, in renminbi, it doesn't matter which currency you express it. In every currency, gold has basically been a fairly consistent earner, returner of capital since 2000. And there's been 1 or 2 years when it's fallen, but in most years actually it's gone up. And the most interesting technical development of the last few months is that gold, I think it was in November last year, reached a new all-time nominal high in US dollars itself. And by the time it's doing that in dollars, you know that the jig is up. So this is not a story that's linked to any one currency per se. All Western governments are effectively insolvent. We know that, and that's been old news for a while. So to go back to your question, nothing's dramatically changed. The economic, I'd say economic and particularly fiscal and budgetary outlook has got objectively worse since the last time we spoke. I think I'm correct in saying that the amount of debts, the sheer size of debt service, debt interest payments for the states is now for the first time ever higher than US military spending.
Wow.
I think I'm right in saying that military spending is also higher than the next 9 countries in the world put together.
Yes.
So you're seeing some astonishing shifts in the tectonic plates of sort of global geopolitics and economics and finance. And so in other words, if you thought, as I did, we were at the last chance saloon, what is that, 16 years ago, with the global financial crisis, things have only realistically got worse. The debt burden's got worse. We know that the US is 34 trillion in the red, and that's just the on the balance sheet stuff. So let alone the unfunded liabilities of the US government. None of this has improved. None of this has got in any way, shape or form better. You've now got a migrant crisis seemingly around the world, certainly in Europe and certainly in the US. And I'm just going to see if I can. This was an absolute perler from this presentation that people may not be familiar with, and I just want to bring it up because it's such an insight into democratic thinking. There's a guy called Jamal Bowman, and if the name Jamal Bowman is not familiar to you, he's a congressman representing New York City, and you may have heard of him because they were having a vote on basically keeping the US government open. This is in September last year, and he basically pulled the fire alarm. So the whole building had to be evacuated. This isn't a conspiracy theory because he's on camera doing it and he's admitted to it. And apparently that's a felony charge. Anyhow, so that's Jamal Bowman for you, so a responsible member of the Democratic Party. His latest wheeze is to demand that descendants of former slaves receive, at minimum, $14 trillion worth of reparations. Now, $14 trillion is more than half the size of the entire US economy.
Mhm.
And yet this is presumably a serious, at least on his part, serious suggestion. We are in clown world. We've been in clown world for a while, but we've gone so far down into clown world that we may never come back up again.
Their risks, their opportunities. Just have to play the cycle and prepare for the worst.
So
No, very few people are preparing for the worst.
practically, what do people need to do to prepare for the worst in your scenario?
Hold physical gold, stock up on food, play the cycle in equities, but be wary of playing it too long. So it's an opportunity to make hay to survive the storm.
I think many entities, governments, corporations, and individuals are concerned about the overreaching nature of the American political machine. I myself like to save outside dollars, just in case, and I'm no government. Certainly, as I say, while the governments trust us less and less, for good reason, they trust us more than they trust each other. And certainly the move to gold, I think in many senses, represents, first of all, their understanding that getting paid a negative interest rate and assigning seigniorage to a country like the United States that's trying to exert undue influence is both stupid and negative. I think they also understand that if they are going over time to utilize a medium of exchange that isn't the US dollar, that gold is the only one that they can do it in. I notice, as an example, the BRICS currency, which many newsletter publishers are selling circulations on based on the fact that it's going to destroy the dollar. My suggestion is that's absolute hogwash. Doug Casey again. The dollar is an IOU nothing. The euro with 17 or 18 countries is a who owes you nothing. The BRICS is a nobody owes you anything. Can you imagine a fiat currency that would operate between, as an example, India and China with open hostility on their borders? Can you imagine the Chinese running a large trade surplus with the Russians and presenting a bill at the end of the year for settlement? This is all silly. I suspect, despite all of its flaws, that the U.S. government will, for the rest of my life at least, remain the world's reserve currency, the world's settlement currency. I'm not arguing that that's a good thing, although as an American, for me, it's a wonderful thing. The idea that we have the benefit of seigniorage and we can export our idiocy to countries around the world who have no alternative because the other forms of idiocy are greater. For me, that's a wonderful thing until it ends. So where I go is that I continue to save part of my liquidity. And by the way, I believe in liquidity. I continue to save some of my liquidity in gold. I don't own it because I think it might go from 2,000 to 2,275. I own it because if faith in the system gets shaken, I'm afraid it's going to go to $8,000 or $10,000. I'm afraid that we revisit 2008 in some fashion. What would cause it? I don't know. I'm not that smart.